Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets, or the markets that move the news in this case, because we have a news-moving market. That was a tongue twister, Rob. Help me out with this one. News-moving market this week, as gold did put in Sunday evening in the Asian market a new all-time high. That seems repetitive over the last couple years. I feel like I've said that before.
Well, and a lot happened just in the morning trading session. When I woke up at 4:30 and saw the moon shot up into the 2150 range, I went out and walked the dogs, let the horses out, cleaned the stalls, brought in the wood, came back to my office at home, checked the market, and here we are back down. Gold had reversed. It was a $60-something up move first thing in the morning in the Asian market, and then hit New York and then fell another $50 down to where we are now at the 2020 range. And you and I and Tori were talking about this last week. You know, we expected that 2100, 2150 rally to occur at some point over the next few weeks. Well, it happened in the first few hours.
3 days later.
Yeah, all at once. And here we are. We're down around 2020, and this is a fib number, correct?
Sure. So if you look at the short-term move, we've been following gold now pretty closely over the last few months as we've been pushing up towards these high water marks. You know, we got pretty high back in May in the 2060s, 2070s, back up to the all-time high. And then we watched things follow back down. But instead of going down to the 1600s like it had done the previous year, we seemed to stop at around low 1800s. So that occurred back in October, beginning of October this year. And if you look at that starting point, let's say around 1812, 1813, and you draw that up to where we hit on Monday morning, 2149, and you draw your fibs there, yep, 2020, that's your first potential little resting point for gold at the 382 fib.
Now, where's the 50 fib number? Isn't that down around 19? That's in the high 19s you said earlier, like 1918?
1980.
1980, yeah.
You got the 8 right. Yeah, 1980 would be your halfway mark.
Okay.
And then the 618 is down around 1941-ish. So a couple really good spots here. And the 1941 looks real good to me as far as a correction goes. I think we are going to see a deeper correction than this 2020, personally. One thing I've argued for a while is that reversals tend to happen fairly quickly. That was a pretty quick turnaround, as you pointed out, you know, moonshot, and then the rocket exploded, came right back down to 2020. So if we're going to see something pull back here, I really like that short-term 618. And it's not just because that's where we put our foot back in November. We've had a two-step move up. Went from 1810, 1820 up to just over 2000. We came back down, and in November we hit about 1935, and then up to Monday where we finished almost 2150. So if we come back down to that little spot there, I really like that short term, but if you zoom the chart out a little bit, I really like it long term too. Because if we step all the way back to November of last year, now this is the last time we were in the 1600s. You know, the last time when we made that big push up over 2000, closing in on 2100, that was March of last year. And then we had a legitimate fall, you know, a real correction all the way back to the 1600s. So if you start this longer term timeline from the low 1600s to 2150, your 382 fib is also in the 1940s. So you've got two fibs lining up here kind of side by side.
With the 200-day. And you've also got the 200-day right around 1935, 1940, correct?
Yeah, your 200-day, I think, currently is sitting right at like 1945 today.
Okay.
It has come up just because gold is higher, the 200-day price line. You get a new number every day to add into the average.
Right. And then looking at what we saw happening on Monday, without even thinking technically Fibonacci points, moving averages, it looked to me like it opened up in the Asian market and somebody decided to just run it way up and sweep all those options that were saying, yes, I will sell my gold at 2100 or 2150. And it looks like they shook the tree. A whole lot of gold fell out of the tree and they bought it. And then, it just cascaded back down. I think they're clearing the decks. That's just my personal opinion.
You play any football in high school, Rob? I can't remember.
Yes, I did.
All right. So I played defensive end, outside linebacker when I played football in high school.
Me too.
Really?
Yep.
We're going to have that conversation sometime. Least favorite offensive player as a linebacker?
Oh, the wide receiver that would like to do a crackback on me.
Yeah, or the fullback coming right up
coming
the middle,
right at you.
But it's the same principle either way. It's the same principle either way, right? It's the guy that gets you out of the way for the guy that's actually carrying the ball. Right. And I think you might be right here. I think we could be looking at something trying to blow open the barn doors for the next move up. Mm-hmm. We knew there would be a good number of standing sell orders at all-time high pricing. There were probably a lot of people who bought gold in the 16s, 17, 18s, especially in the futures market, that were just waiting to clear those positions out. Somebody with some money came in and bought them all up.
Sure did.
And the reason I feel that way is when you and I were talking the other day, I pulled up a short-term chart. Most of that move up happened in about 15 to 20 minutes. Mm-hmm. So it all happened at once.
It did, and it was shocking. So here we are. We're at the 382 right now, and I do agree that I think gold's got a little bit more profit-taking. I do think that gold will pull back a little bit more, but the bigger story is this is only going to be, in my opinion, the next few weeks, and then I think the decks are clear for gold to start taking off first of next year in a very strong move.
Right, and that would definitely line up with some of the seasonal trends we've seen through the years, where we have gold put in highs January, February, March.
Correct.
Somewhere in first quarter tends to be when you see gold make good, strong pushes up.
Big moves, yeah.
Yeah, and that big move could be what we talked about a week or two ago, 2350.
Yeah, well, we really thought that this move that we saw Monday morning would occur over a period of weeks, not minutes.
Right.
But, Miles, we are looking at gold taking the headlines. But last week when we were talking about silver breaking out above its pennant formation into the $25.30 range, and now silver is back down right at 24 as we are talking. And I believe it's not only back inside its compression zone, but disappointing to the silver bugs that listen in.
Yeah, silver, I don't know what to say anymore. It's because it's the same. Well, it's the same thing over and over again, right? Silver is just angry gold. It's just more volatile. When gold's charging forward, silver runs out ahead. And when gold slows down, silver takes a nap, and it's taking a nap. I am a little disappointed, though. I do agree, because silver did fail to even get above its May highs, which are nowhere near its all-time highs. You're correct. We did break back down into that pennant range. I'm okay with that. We've moved above it a couple times here. We kind of keep stretching the pennant out. Mm-hmm. Every high is a little bit outside the pennant range, and then it comes back down. But we still haven't put in a higher high. We've put in a lower high ever since 2021. It's been 2 straight years of pennant. We are back down. We're also at its short-term 382 fib. So again, it follows kind of similar concept as gold, but we're just not seeing the nominal price breakout in silver yet.
We can only hope that one day silver is going to do what silver has done in the past, but we just have to be patient.
Sure. And I think those that were patient in 2008 were rewarded in 2011. Mm-hmm. It just took a couple years.
Yeah. Well, let's talk about the dollar. What's the dollar looking like?
Dollar actually took a little bounce off the 50% line. So looking back at where the dollar started its move back in June of 2021, so dollar down at around 90 up to 114, that puts your 50% line right around 102.5. And the dollar's been playing between the 382 and the 618 for a while. So it's been bouncing up and down above and below the 50% line. The move up, 107.25 back in October, obviously down since then, and we're playing right around the 200-day moving average. So the dollar's actually trading pretty normally, given the trading range that it's been in all year. Really, at the beginning of the year, we're at 105. down to 100. Maybe we spiked up to 107 at one point, but realistically, we've been in this 5-point range in the dollar index. Now, what hasn't been in a similar range in the dollar is the interest rate. So the dollar looks like trading as normal, but it's also getting carried on the back of a rising interest rate, which does make me nervous going forward in terms of the dollar, because you should be seeing a stronger dollar and you're just not. And it makes me wonder if we did have interest rates down at 0.25%, 0.5%, where we were a year or two ago.
Yeah.
Dollar ain't at 102. In fact, the dollar isn't trading sideways either. Dollar's probably sitting down at 75 at that point. We're looking 10-year ago levels. So the dollar looks quote unquote fine if you ignore what's actually happening to the US dollar. And well, the rest of the world is also ignoring the US dollar and nobody's buying those Treasury bonds.
Yeah, and we're still waiting on the next release of the Fed's balance sheet, but so far the balance sheet has been shrinking, not growing. I've been surprised by that.
Yeah, they're sticking to their guns on the no buybacks, and that's, I guess, good. That's one of the principles I was hoping they'd hold to, and they have been.
Yeah.
Let's look at the equity market. We haven't done that in a while.
Well, the transports are getting clubbed today, but the Dow is holding up. Let's take a look at the NASDAQ. It's down a little bit, 0.5 percentage point. It's down, say, 90 points. But really, the transports are not having a good day.
No, the transports definitely bounced back down here over the last couple days, really since Monday. But percentage-wise, it's not huge. I do think it's telling that after the giant, waterfall cascade of the transports between July and October, we've bounced back about halfway.
Halfway.
I don't see strength. I don't feel it. I don't think we're looking at strength going forward, which is unfortunate because you would think in the Christmas season, the transport should be doing okay.
Should be.
They ain't
going
to get better in January.
No.
So with that being said, we're playing right around the 200-day moving average, which is fine. I mean, we're way above it. We crashed down. We went way below it. So we're playing right around the moving average. And I wouldn't be surprised to see the transports probably peter out here through the end of the year. I don't see them going anywhere. You mentioned the industrials being up, but the industrials are up over the last day or two. They're right into a rising wedge, or excuse me, just a rising channel, not a wedge. So they touched the wedge here this week. I wouldn't be surprised to see, if history repeats itself, see the industrials actually come back down.
Well, hopefully it's just going to be a fairly calm financial season going into Christmas as the entire world just keeps getting weirder and weirder.
Yeah, I wouldn't be surprised to see things stay relatively calm elsewhere. Gold breaking into new all-time highs again. Because it's becoming a repeating theme, I don't think it's really gathering the attention that it deserves. But we get that breakout move, we get that 2,300-ish mark on gold, and I can tell you you're going to hear about it on Fox News again.
Oh, yeah.
So they're going to wait till 2,300.
Right.
But it's going to happen.
Yeah. And I think it will be January, February. I think it's going to happen sooner than later.
Yeah. And when it does, boy, it happens quick. We learned that this week.
Well, and that's the interesting thing, because usually moves higher take time, moves lower happen quickly. It's the reverse of this now.
Yeah, that is true. It's like playing poker, right? Like it takes a lot of hands to make money and only one hand to lose it. Yeah, I like that. I'm going to use that again down the road.
Well, Miles, that's all I've got for this week.
Yeah, I think I'm tapped out too. It was an exciting week. It's been fun to talk to clients this week.
Yeah.
And I think that might be the biggest single day move in my career, Rob.
It is for me. Yeah. Dollar-wise, I'm sure I've seen.
Dollar-wise.
And it's not just the biggest percentage move in one direction. It was the biggest move I've seen in both directions. I've never seen it like that before, and I've been doing this a while.
Yeah, it's the swing.
It's the swing.
I mean, you're talking
$120 swing.
Yeah, in a single day.
Morning.
Yeah, $128 swing in a single morning. So go figure.
Interesting times ahead, buddy.
Yes, sir. Glad to be here. Appreciate it as always, Rob. Thanks for popping into the studio. And we'll hopefully have Tori back next week, join us, give us some insight from his trip, what he's seeing out there as well. So thank you all for joining us as usual this week. Keep an eye on the metals market. Look for some opportunities coming up. Why not check in with your precious metals broker here at McIlvaney Precious Metals? Love to chat about these markets with you. We can be reached at 800-525-9556. You can also find us on our website at mcilvaney.com. We're on Twitter at ICA Gold and Facebook at McIlvaney Financial. Thanks for listening. Have a great week.